Okay, everybody, welcome along to part two. This is going to be a continuation off from where we left off with the part one. What I'll do, I'll start with LUV, or ticker symbol LUV, which is Southwest Airlines Company. Then we'll move into Micron Technologies and finish with the United States Steel Corp. So I guess, a parallel to start off with this particular stock is that more or less it has broken out. It has been also oscillating sideways. Most recently, really, from January 2017 through to the most recent breakout in May 2017. If you rewind your memory to part one and I guess the analysis which took place on Facebook, I was talking about the 1, 2, 3 breakout. Now, on my screen, you can see LUV more or less if you have a honed in eye. You can see the 1, 2, 3 which has already taken place. Since breaking out in mid-May 2017, you can see that we came up on two occasions. We ran into about $61 a share, and then we pulled back down to retest the initial pivot point. This is what we call the 1, 2, 3. Since that retest has occurred, LUV is trending to the upside. If I color coordinate this and just make this blue, you can see the bullish continuation which has taken place. This is a very common pattern, and it's something you should think about in terms of Facebook if it chooses to break out over the coming weeks. If you get triggered into a stock, say for instance Facebook, and then you see it pull back. However, if you see these candlesticks develop, these are very common during the pullback. This is what we call a hammer at support, and this is what we also identified when we started looking at Disney coming down and retesting that pivot at about $104 a share. We also got the makings of it on this particular day as well. What's most important is that you recognize these candlesticks have lower wicks. This is indicating intraday buying pressure, which is taking place amongst and around that initial breakout point. So now that we are technically trending, obviously, if we just go through some of these continuation types of patterns, we've gone through the pattern itself, which is that 1, 2, 3. The candlesticks themselves aren't really giving us all that much information. If I zoom on into them, we're just really seeing a mixture of what we call spinning tops type of candlesticks, followed by just pretty ordinary long day sort of Morobozu white bullish candlesticks as well. So we don't have any reversal signals whatsoever at this particular point. We're holding above the simple moving averages. We're also trending above the exponential moving averages, which is quite healthy. Volume is still quite average as well, so it's not trailing off, nor are we seeing any expanding volume. It is just holding stable, which is fantastic. Really what you want to pay attention to after a breakout is, well, what is the ADX and the CCI doing? And as you can see, the CCI is still holding above positive 100. It hasn't flinched, it hasn't turned down. And the ADX over the past maybe 3 or 4 trading sessions, it is ever so slightly turned up. So this is still liking the bullish trend breakouts. This is a relatively straightforward type of trade setup that you can place in a virtual account, but you can see more or less if LUV decides to close and continue above 62.55, we have got all of the reasons to expect this to continue to trend indefinitely. And what I mean by trend indefinitely is that, look, we'll just monitor it day by day and we'll look for the first inklings of reversal criteria, which will first of all, or at least initially, set up in the actual candlestick construction. So 62.55 is a very logical entry. In terms of an actual hard target, we can also do some Fibonacci expansion levels off from, say, for instance, this candlestick and this particular candlestick right here. I won't go into the reasons for choosing these two particular candlesticks, but there is a reason for that. And generally what I like to do is I like to, sort of expand this out to the point, or at least the 2.618 expansion level, which is pricing us in at about $69 a share, just above it. So if I just put in a price point up here, 69.11 makes a lot of sense. I'll change this to purple because when I do have a purple type of trade target, it is due to a Fibonacci expansion level or a reason behind that. So you've got a nice little, say, $6.50 on the upside. Your stop can be placed below Thursday's candle. The risk and reward behind this trade is quite exceptional. If you just think about it right now, if we just quickly align it, let me just bring up the right support and resistance so that I can get the number. You can see your risk. You've got about $1.50 of risk to make about $6.50 of profit. So again, that is in the criteria of a 4-to-1 risk and reward on a trend breakout. So this is quite nice. In terms of a bearish trade setup, we really don't have any one until we start cracking below this pivot point, and most importantly, until or if we can get below these two lower wicks over here. But even this little swing low over here, which is coming in at about $56 a share. So although we can see a pullback, and that is also a possibility, it's not to be concerned about until we start cracking below these little swing lows over here, which have established themselves in May and also continued into the first half of June 2017. So a pretty straightforward trade type of setup right there. Let's move into Micron Technologies. Micron has moved into a little bit of a sort of a volatile state. What is interesting about this is that as I sort of, visually identify this and look at this, I mean, it looks as though we're setting up some form of a symmetrical triangle, almost a wedge type of consolidation pattern. Now, generally, in this instance, this is what we would call a continuation type of pattern. Yes, it is a short-term consolidation. And what I mean by consolidation is that, look, it doesn't tick the criteria of what we would call some form of a channel. Again, it just takes the form of a shorter type of time frame, which again fits the time frame of that of a pennant or, a symmetrical type of wedge or triangle. I mean, there's a few definitions for it, but again, the actual, the terminology of the correct pattern comes down to time frame. So it's a question of, well, when does this pattern actually break? And what I mean by break is, well, when do we see the upward resolution, or potentially, I mean, we can also draw on the second half of this and say, well, maybe it's even a diamond. And this is the beauty, again, of technical analysis, because you do have these lower wicks over here. So you can see this sort of diamond pattern as well. Now, in the case of a diamond pattern, generally what happens is that it's a reversal type of signal as well. And it fits, the volatility, which has sort of been showing up in Micron Technology throughout the month of June. I mean, we saw quite a rash day of selling from 33 all the way down to 29. That's about a 10% move. But then again, we saw it rebound over the past number of weeks back up to retest resistance. So this sort of fits the criteria more of a relatively neutral type of trade setup. If we get any sort of movement above this little swing high over here at about 33.15, we would assume that the trend is continuing. However, if we just take a look at the nature of the trend continuation, it hasn't been the nicest of trends. So, I mean, if we had to rate or at least sort of rank this relative to other trades, yes, we can make the bullish sort of, setup. And it makes a lot of sense given, of course, that we are still trending above the long-term simples and above the exponentials. And I mean, look, the oscillators are trying to reset. And again, that sort of fits the, this reset zone, which has been going on in Micron for about a month now. But you just have to be aware that the trend itself, I mean, it is a little bit volatile and we don't really see these major upward legs. Oftentimes it is sort of drawn out over a longer type of period, and it is a little bit of a sort of a grind higher, so to speak, for I guess the sentiment and I guess the collective majority behind, or at least the active market participants who are following along with Micron Technology. So I mean, in terms of the bearish trade setup, again, it needs to be placed at the low of this symmetrical triangle, so to speak. However, again, and this is the caveat to this type of trade, obviously, if I zoom out and show you this is going back to early 2016. This is on the weekly chart right now. We are in a defined upward move. So generally, you don't like to trade counter trend unless you have an air gap, which is essentially what we have between 28 and all the way down to 26. However, if you choose to do so, it is going to be a very short-term trade. And if we get down to this 26.50 area, it is going to be a bounce opportunity. So what I would like to do is just to draw a rectangular type of tool for you and place that here, and this is going to be green, unlike the other previous rectangular box I drew, which was red. Again, that sort of resembles or at least reflects resistance. In this particular instance, this reflects support. But again, you have to be aware that price is trending higher. So again, our natural sort of bias is to the upside because the trend again hasn't really given us any signals or any definitive signals in terms of confirmation that the trend itself has reversed. So that leads me to believe that this is ultimately going to be a breakout type of trade. Interestingly enough, towards the end of June, as per my charting software on the 29th, we are, at least MU is announced, or at least expected to announce or report their expected earnings. So that is going to add to volatility. And generally what we do in Pro, I would encourage a lot of people who are listening to this video to think about it, is not to actually have an open trade trigger over the period of earnings. The reason why is because it is largely unpredictable. We really don't know what is going to happen in terms of, price reaction to that fundamental announcement. Generally what you do is you leave it and then you trade the associated gap if one does eventuate. And that is, or at least that boils down into gap theory, which is something that we move into each and every week, if applicable, in that Pro analysis class. Let's finish with X at the moment. This is a relatively straightforward type of trade. It was a trade which I've been keeping an eye on for quite some time. And again, when you see stocks move into these really low sort of volatile types of really tight ranges between really non-existent support and resistance, it sort of just gets stuck. You really want to pay attention to these types of trades. The reason why is because all you need to really reflect, or at least to identify, is out of a Bollinger Band squeeze. Now on my chart right now, I've changed my templates to the Bollinger Band, and you can see that really since about mid-May through to really the current juncture, we have been more or less completely stagnant in this stock. And this is when a lot of people switch off and they stop paying attention to these types of stocks. Interestingly enough, we have one at the moment, very similar to this on X in our top 12 list relative to IBM. But again, what you want to do in this particular instance is to remain as neutral as possible. Now, with this X trade, if we start flinching above 23.26, which is outside of the Bollinger Band and also outside of these little wicks over here, we would expect this to run at a minimum to the top of this gap. Now, what you need to do at this particular point is to recognize that we have an open window. So technically, anywhere in this box that I am drawing on my screen, I mean, a very ugly box, unsymmetrical type of box, but anywhere in this box, it can act as resistance. The upper area, which you should be paying attention to as for an actual target on the trade, is all the way up here at about $30 a stock. So, I mean, you've got a nice little move, about $6.75, so to speak, or $6.74 from our breakout point to the top of the gap. To the bottom of the gap, you have less. And this is just the type of juggling act which we perform as technical traders, okay? So X is a pretty decent trade, very neutral trade. You'd have your stop just below Friday's candle. Again, a really nice virtual trade for people who are learning. On the downside, I mean, if we just get a bearish engulfing candlestick, or that of, say, for instance, a one black crow on Monday, or any really variant of any bearish candlestick, which should usher in, a potential further reversal, the bearish trigger is actually down here at 1864, again below the lower Bollinger Band, but also below this little support. And the reason I have it where it is, I mean, it even has to be moved down just a smidge lower, is because of this one particular candlestick over here. I mean, this little spinning top. Once we flinch all of this support, if it chooses to break, get below this horizontal support, and also outside of these Bollinger Bands, the bottom will just fall out of X if it chooses to move in this direction. And the lower target on this, let me just color coordinate this. I'll move this into an orange target, because that's generally what we like to do in terms of our targets. When we go through trade analysis, the actual target to the downside should be positioned more or less around $16 a share, which is opening up about a $2.30 profit potential. And of course, we will have to sort of work with the reward of the trade, or sorry, the risk of the trade, once we get the candles, and if in fact they do develop, because at the moment we're just working with a bunch of blank space in my chart right now. So it's something that we'll have to work with in due course if this chooses to reverse. But really the morale of the story, so to speak, with Bollinger Band squeezes is just to remain neutral and to just allow price action to move whichever direction it chooses to do so, and for you to jump on board with that impending volatile breakout, or that sort of volatility surge which is associated after these low volatile periods, which make up the actual Bollinger Band squeeze. All right, so that essentially makes our top 6 sort of list that I've got on my screen right now outside of our top 12 individual trade lists. Again, I hope this has been helpful for you. If you'd like to learn anything more, if you have any further questions, please email me, success@pivotpoint-trading.com, and I will respond as quickly as I possibly can. Otherwise, if you want to look into our top 12 individual trade list, that is a much more widely followed list, also encompassing the top 3 US indices. That is the Dow, the S&P, and the NASDAQ. Also gold, silver, and the US dollar. I'd encourage you to have a look at Pivot Point Pro. Until then, everybody right around the world, this is James signing off on behalf of Pivot Point Trading. Have an enjoyable weekend, and I'll be back with you in due course. All the best, everyone. Goodbye.